Welcome back. You're watching KTN Business Today with me, Abi Agina, on the second part of the program. And our Twitter poll question today is, what is the right age to start saving? You can share with us your feedback using our Twitter handles at KTN News, or you can reach me directly at Agina Abi, and we'll be able to sample your views. Remember to use the hashtag KTN Business. Well, let's talk matters to do with the banking sector now, and the Central Bank of Kenya and the Kenya Deposit Insurance Corporation recently gave SBM Holdings the go-ahead to acquire Chase Bank's carved-out assets and liabilities through its subsidiary SBM Bank. The proposed transaction is in line with SBM's regional expansion strategy into East Africa. According to the chairman of SBM, Lee Kwong Wing, the acquisition of certain assets and matched liabilities of Chase Bank confirms the realization of SBM Africa strategy. SBMH aims at consolidating its presence in East Africa and gearing up the operations with SBMK with the ambition of becoming a Tier 1 bank in Kenya in the medium to long term. SBM Group is one of the largest banking and financial service institutions listed on the Stock Exchange of Mauritius, with the market capitalization approximately $700 million as of 31st July. Still staying with that, and the KDIC provides a safety net for the savings, banking and payment systems in the Republic of Kenya. It is actually the mandated custodian for assets at Chase Bank that is under receivership. And we are now joined by Mohammed, who is the CEO at KDIC. Many thanks, Mr. Mohammed, for joining us this afternoon. And let's just start off by, let's talk about KDIC's plan to execute its risk minimization mandate to ensure that no deposit-taking institution licensed and regulated by CBK goes under. What is the progress so far with Chase Bank?
And thank you so much, Abi.
Well,
yeah, thank you, Abi, and
carry on.
And thank you, viewers. Kenya Deposit Insurance Corporation, it's a state organ established under an act, and it has the mandate of providing deposit insurance and also to act as a resolution authority. And KDIC's mandate on resolution authority is to kind of resolve banks when they go into problems. And indeed, KDIC has what we call the risk minimization mandate, which is a proactive mandate in order to mitigate and reduce any bank failures.
Yes.
And in the event of a bank failure, KDIC is to apply the resolution options to expeditiously resolve the bank issue problem and enable depositors have access to their banking activities.
Mm-hmm. And
now, how do we do this? We do this.
Please carry on.
Through our mandate and through the act. KDIC has examination powers, which it will work with the Central Bank of Kenya in order to proactively resolve any issues in a bank, and in the event of a problem, resolve the bank as a going concern.
Uh-huh.
My vision and the vision of KDIC is to get away from closure of banks and resolve banks while they are still trading. And in the unlikely event of a closure,
yes,
we resolve that bank expeditiously.
Mm-hmm. Interesting foundation you've laid there, Mr. Mohammed. And what was it about SBM that meant it emerged as the preferred candidate when it came to issues of taking over Chase Bank?
Good. Now, when Chase Bank went into problems, Central Bank placed it under receivership, and KDIC was appointed the receiver. And for the first time, we also brought in KCB to manage with us the affairs of Chase Bank. Then Chase Bank, we took it through an expression of interest motion where there were competitive biddings, and eventually SBM became the preferred bidder.
Uh-huh.
And SBM went for a carving out what technically we call transfer and exclusion.
Yes.
Carving out part of the assets and the liabilities of the bank.
Mm-hmm.
And just to make you understand is that in deposit insurance terminology, when we are carving out a bank, is we don't look at the price of the assets in money terms.
Mm-hmm.
We look at the value of the assets to match it with the value of liabilities, which are the deposits.
Yes.
Now, currently, SBM has carved out 75% of the assets, and they will enable the depositors access 75% of their deposits. And the 25% is not lost. I want to make this point very clear.
Yes, sir.
And the 25% is not value. 25% is the quantum, but we are going to manage it and try to obtain the best value for the depositors and creditors, and take it back to them for them to access 100% of their deposits, if possible.
All right.
And this time KDIC wants to come with some new strategies. Previously Deposit Protection Fund, which was the predecessor of KDIC, had the liquidation powers, where liquidation, you pay the 100,000 and realize the assets and continue distributing the what we call liquidation dividends.
Mm-hmm.
But now we want to come with a new strategy to see how we can dispose of this 25%.
Yes.
Efficiently and for the best market value.
Yes.
In order for the depositors to access full of their deposits in the new bank under SBM.
Uh-huh.
And indeed, I want to share with the viewers that this is the first time this resolution option is being applied in Africa. And we are being very careful. We want to make sure that we are indeed setting a precedent. So that is why we are trying to manage it in the best manner possible.
Uh-huh. This is quite a game changer for many people in the banking sector. Now that you've mentioned that it's actually Kenya leading from the front when it comes to taking up this matter. And moving the conversation forward, Mohammed, so where does this leave the depositors who might feel that they've lost out on large deposits? Is there any hope when it comes to them recouping their hard-earned cash?
Indeed, Abi, in Chase Bank, we also did a first-timer an option where we enable depositors access up to a maximum of 1 million shillings while the bank was under receivership. And we enabled 93% of the depositors full access of their deposits.
Yes.
So the remaining 7% who own about 90% of the deposit value are now being given access to 75% of their deposits.
Yes.
Over and above the 1 million which they accessed.
Mm-hmm.
And indeed, if you go by what we used to do before, it took some of the banks about 15, 20 years to pay the dividend of about between 10 to to 20%.
Correct.
And this was because the assets of those banks were very bad, but some banks managed to pay 100% because of the status of their assets.
Sure.
But now the difference is that one was taking quite a long time. This one is pegged for 3 years. And indeed, I want to make it clear, out of the 75%, 50% of that 75% will be accessed day 1 plus day 7. Then the other 50% will be staggered for 3 years, earning interest of 7%. And indeed, if SBM and business improves, they may even pay it within a shorter time.
All right.
And at the same time, the 25% we shall realize and add it on the 75%.
Mm-hmm.
So I don't see where people say that depositors are losing.
All right. And final question, Mohammed. Of course, the central bank governor, Dr. Patrick Njoroge, is on record saying that the developments we've seen in the banking sector are not systemic, and consumers should not be worried by the 3 banks which actually went under, that being Dubai Bank, Chase Bank, and Imperial Bank. From where you sit, how safe are Kenyan banks? Because we are in an interesting transition where we're also seeing the implementation of the IFSR 9, as well as the interest rate cap, which has seen a number of banks taking the pressure from the markets.
And thank you, Abi. That is a question for central bank. But however, my comment is our banks are so far stable. And whatever happened, we have learned a lot of lessons from it. And going forward in collaboration with the central bank and the National Treasury, we shall continue to foster stability, because that is our public policy objective, fostering the financial stability. And we want to assure the depositors their money is safe, that in the unlikely event of any failure, we are able to manage it.
Uh-huh.
KDIC has now enough powers and mandate to manage any problematic, of course, with the assistance of the central bank and the National Treasury.
Uh-huh.
And going forward, we also want our members are the financial institutions and the microfinances. And going forward, we want to put them on a risk-based premium, because we collect premiums from our members. We want the banks also to be alive to risk management and applications, so that all together we try to forestall and reduce and mitigate any bank failures.
Many thanks there, Mohammed, who is the CEO of the Kenya Deposit Insurance Corporation, talking to us on these interesting developments in the banking sector, and of course with a focus on Chase Bank, which he says it is well on its way back to recovery under SBM Holdings as a Mauritius-based bank. Moving on, the Kenyan government must make comprehensive changes to its monetary and fiscal policy if it hopes to sustain economic growth in the country. That is a general note struck by the Standard Chartered Bank Economic Outlook for 2018. Chief Economist for Africa and Middle East, Razia Khan, says this will be integral in determining the general direction the economy takes in this year.
On the heels of Central Bank of Kenya Governor Patrick Njoroge's warnings to the government to look outside of external borrowing to fund future infrastructural projects, Khan explained that the public debt ratio is one of the biggest hindrances to Kenya's economy, with the current national debt at 4.5 trillion Kenya shillings.
For every shilling that Kenya collects in revenue, just less than 20% of that, around 19% of it, will have to be spent on servicing the debt.
She added that infrastructure, resolution of slow credit growth due to the capping of interest rates, and weak private investment are just some of the key areas in which the government needs to direct its attention for the country to realize its full economic potential.
If banks start to ration credit even more carefully because they're getting less of a return if interest rates are cut, then you're not going to see more lending and more stimulus in the Kenyan economy on the back of a rate cut.
The chief economist also stressed the importance of the export industry and foreign trade in helping strengthen foreign exchange.
The GDP of a country is typically measured in local currency. If a currency weakens, then the debt in foreign currency debt expressed in local currency terms will be growing even faster, and that can pressure overall public debt ratios.
With Moody's Investors Service possibly downgrading Kenya's credit rating due to persistent large primary deficits and high borrowing costs, Kenya's economic status hangs in the balance. But with continued positive economic shocks, such as the direct flights from Nairobi to New York, things could turn around for the better. Tandiwe Yego, KTN News.
Many thanks, Tandiwe. Moving on, Cooperative Bank is looking to grow its scholarship portfolio, even as the bank ropes in new frontiers to spur its corporate social responsibility unit. The bank, in an update, will be financing 665 Form 1 beneficiaries who sat for KCSE. The bank stands as the largest secondary education scholarship scheme. Of the 655 new scholarships to Form 1 students, 420 were awarded by the bank's regional delegates forums, and the remaining 235 scholarships at 5 per county awarded by county governments in all the 47 counties. The bank's group managing director, Dr. Gideon Muriuki, has said that additionally the bank is educating a total of 159 students selected from the top performing beneficiaries of the secondary school scholarships through their entire university education. The scholarships are awarded on merit to gifted but needy students from all regions of Kenya. Well, moving on, and Isuzu, multinational automaker, Isuzu Motors Limited Japan, has officially launched Isuzu East Africa. This follows the recent buyout of General Motors' 57.7% majority shares at General Motors East Africa in 2017. Susumu Hosoi, the chairman of the board, Isuzu Motors Limited, was the chief guest at the event. Speaking at the launch ceremony, Hosoi noted that Kenya was an important market with great potential in Africa. On her part, Isuzu East Africa Managing Director Rita Kavashe revealed that the changes would enable the company renew its steadfast focus on ensuring quality sales and maintenance services in order to enhance market share.
The launch of Isuzu East Africa Limited. Round of applause, please. A big clap, a big clap.
Market share, we're about 35%. So we look for now export market. Kenya competition will come in, so we think that is more or less stable share. But in the export market, those markets are small, maybe 10,000 units total. So we're looking at if we can get to 10, 15%, 5 percentage points of growth every year is a stretch goal, but that's what we are looking at really in terms of growth in those markets.
Well, indeed, extremely competitive times for the automobile industry in the region, as we did see Rana Motors also launching promotions in Kisumu. Well, we want to wrap up the show with a look at our Twitter poll question. Today we're asking you, what is the right age to start saving for retirement? And I can see the results are out. 40% of you are saying at 20 years of age, you should actually start saving. 39% are saying after 30 years, well, that is quite garnering also a substantial number of people. And 8% are saying 5 years to retirement. 13% saying they do not know the right time to start saving. Well, that's where we want to close here on the program. Interesting feedback coming through, and we'll definitely keep the conversation moving on our social media platforms. My name is Abegina. Many thanks for your valid company. Coming up next is our Swahili team with the BU ya KTN.